Hello and welcome to BQ Prime. I'm your host Vikas Srivastav, and we are back once again with the Managing Director of STL, that is Sterlite Technologies Limited, India's largest provider of digital solutions as well as optical. And today they have come out with good set of numbers as far as their Q4 and full year numbers were concerned. So we are going to talk to Mr. Ankit Agarwal about the performance as well as some updates on the company's latest developments. Welcome to BQ Prime, Ankit.
Thank you for having me
And
again. Yeah,
congratulations once again on your numbers.
thank you very much.
So, what exactly has helped you basically to come back into black, once again, and
Sure.
also your good EBITDA numbers and margins, if you
Sure.
can talk about.
So I think one, I would say overall, if you look at our last few quarters, I think we've consistently talked about focusing on our core areas, which is essentially our optical business, our services business, as well as our digital solutions. And we've looked to actively exit or sell the non-core businesses. So I think that's really helped bring the focus into the company. At the same time, we've talked about becoming world top three in optical business. So that's something that's very exciting for all of us as we continue to scale that business up. I think through the course of last 1 year, I would say as we've continued to scale up our operations, at the same time, we have seen that some of the earlier challenges we had in terms of the container prices, which had gone up almost 3x.
Right.
We had also seen some of the raw materials and gases scale up in their costs. So many of those have normalized, and I think that has improved. At the same time, being able to pass on some of the costs to our customers, and so our pricing has improved as well. At the same time, we have started to be able to not only create some innovative products, some of which we launched recently as well, like the 180 micron fiber. So there's been a good visibility from our customers into some of these solutions. At the same time, we continue to be focused on our cash through some of these exits as well as from the business. We continue to ensure that we generate cash. And very happy to share that we have now reduced our net debt from about 3,400 crores to about 3,100 crores.
Okay.
So this is something that both on the P&L side as well as on our cash side, we continue to be very focused and improve our results from quarter to quarter.
Right. Can you elaborate a little bit more on your this non-core assets that you have
Sure.
exited?
Yes, absolutely. So I think the whole theme was that we'll do fewer things, but we'll be world class at them. And with that, we looked at our portfolio. One of the exits was our data center business in the UK. We exited that to Exatronic. We recently also exited our OSS BSS business to Skyvera out of the US. And we had access business where we were building wireless solutions and we were investing about 50 crores per quarter. So that's something that we stopped at the end of quarter four. So this is something that we believe which has both generated cash for us as well as stopped our losses from the investments that we were doing.
How much cash you have generated in total?
Close to about 280 crores between these two exits, and from a P&L perspective, about 50 crore per quarter has been reduced starting from quarter one onwards.
So that is what has helped you to reduce your debt also.
Yes, to some extent. And of course, the business also is very much focused going forward as well to reduce our fund involvement. We want to reduce our working capital, particularly in the services business, and also to some extent in our optical business.
Okay. You have also today announced your plan to demerge your services business and to list it separately on the exchanges. Can you give more detail? What was the intention and purpose behind that?
Yes, absolutely. I think also if you reflect on history of Sterlite, in the past we had also demerged Sterlite Power.
Correct.
At that point, it had moved into our unlisted entity. And if you see, where both the businesses scaled up, I think it's a great case study within the group itself. So similarly, we felt that in that case, one was a technology business, one was a power business. In this case, also we believe that one is a high-tech manufacturing and technology business. And the other one is a project and network business. So I think very different businesses, very different skill sets, very different teams, and also very different stakeholders and shareholders that we see from the market. So when we looked at where we are from the market perspective, on one side we see tremendous opportunity for growth for the services business, both with private sector and large projects like BharatNet. So we certainly see a lot of opportunity, and we see that it will require capital to ensure that that continues to scale up. At the same time, we felt internally the team was now very well set up in terms of looking at large scale deployment and projects. So that capability is now fully there with the team, the org structure in terms of leadership is fully there to now execute on these projects.
Right. What was the total revenue contribution of this business to your total revenue?
Yeah. So ballpark out of 6,900 crores we did last year, this will be about 1,500 crores. And what is very important is that we're also looking at, as we continue to scale up services business, both the profitability improves as well as we execute projects like T-Fiber and in Maharashtra, our cash also generation will improve. So I think overall combination of these two things, I think there should be positive growth on the services business going forward.
Right. So what kind of growth you see for this business, and by when you are planning to list on the exchange?
Yeah, so the typical demerger process, you need the NCLT approval, you need approval from vendors and other stakeholders. So I think this is a typically 9 to 12-month process. So post that, we believe, subject to all these approvals, we believe in 12 months will be a fair estimate. I think the other part also that I did want to touch upon, that we had a loss-making business in the UK for the services. And very happy to share that as of March, at least March month, we were able to turn that around to 3% positive on EBITDA.
Okay.
So again, this is the same focus, that whatever is loss making, we become profitable and then we generate cash for the business.
Okay. Can you touch upon your China business also, that you are planning to restart, or you have already restarted?
Yes, so very happy to share that we have restarted. We have definitely built a good brand and credibility. Almost 80% of the employees rejoined us when we restarted. So something we're very proud of and speaks of the culture at the company. And we are certainly looking to scale that up. It is certainly a good platform for us because it's a very high quality manufacturing we have there. And the other expansion that we have now started is the growth in terms of our US facility. So we had talked about scaling up our US facility. That's something I'm very happy to share, that commercial production and sales will happen from this Q1 onwards. So again, that will further help us scale up. As we've been sharing, we have close to 10 to 12% share of US market, which is something we're very proud of. And certainly with the US facility there now locally and our brand and visibility improving, I think we can further scale up from there.
So you are present in US, you are present in Europe,
Yes.
mostly in UK, China, and there are other geographies there also that you are looking at?
So in terms of operations, we currently have operations across India, China, Brazil, Italy, and now in US. These are where our manufacturing operations are, but certainly from a sales perspective, we sell into over 100 countries. Our priority focus is definitely US, Europe, India, and now Australia as a growing market.
And what's your total production capacity as of now? And FY24, how do you see it?
Yes, so as we have shared, our intention is to scale up our capacity on cable from about 33 million to 42 million fiber kilometers. We believe that capacity should be fully executed by end of H1 of the current year. So that's progressing well. In addition to that, I would highlight that a big focus for us is to really invest much more in our R&D capabilities. One of the launches that we're very proud of is our recent launch of the 180 micron fiber. To put it in simple perspective, typical fiber around the world is 240 micron, and we have now built the world's smallest fiber, which is at 180 micron. This will enable our cables and our networks to become much smaller, and thereby you can pack more cables and increase your capacity. So this will really enable us, when we're talking about 5G, fiber to the home, this will really enable us to add the capacities.
Right. So with 5G rollout now on large scale taking place in India, and you have already mentioned that you have some 1,000 crore of orders from these companies.
That's right.
So how's this rollout happening, and what kind of growth you see there?
Absolutely. I think in our conversations, for example, with the telecom operators, they all are very clearly targeting between 70 to 80% of the towers to get fiberized from currently about 35-40%. So I think this will clearly accelerate over the next 3 to 4 years. My own view is it is not constrained by capital or intent. It is constrained by ability to execute on the ground. And that's also where our services business comes in, where our new innovations on cable and connectivity come in. So there's a very strong pull now from the operators in India to look at some of our innovative solutions to accelerate the deployment. I would also appreciate the government, particularly the Telecom Ministry, Ministry of Commerce, and various ministries. They're taking a very active interest to accelerate and improve the challenges on the ground around right-of-way, permissions, and all of those, which have certainly become much better on the ground. So this is something that I think is positive. My own view is India will go from about 50-60 million 5G users currently to about 200 million users in the next 2 to 3 years. So fairly rapid increase. And I think certainly with the handset prices continuing to come down, with more and more coverage by Jio and Airtel, I think we will see very rapid increase in 5G.
Right. And also, how long you think, because as you said that it will take almost 70 to 80% of these towers to be basically first fiberized.
Yes.
So how long it will take for the entire 5G rollout to take place?
Sure. So I think overall, today we have about 800 million internet users. and close to 1 billion mobile subscribers. So my own view is that at least we will get to 200 to 250 million 5G subscribers in next 2 to 3 years.
Okay.
And I think for the balance will overall take about 5 years from now. So broadly between 2023 to 2028, I think that's the period we believe 5G will conclude. But then of course we're looking at 6G as well now. And Government of India has also launched a vision paper on 6G called 6G Bharat. So I think that's also going to further accelerate fiber deployment. So if you really see from an 8 to 10 year window, whether it's 5G, whether it's fiber to the home, fiber to enterprise, or you look at 6G, we certainly believe there's a long window here for fiber deployment.
Right. So one last question on your overall, how do you see the outlook for yourself with this kind of potential around and opportunities? Where do you see STL FY24 and next 2 to 3 years?
Sure. So I think overall, I think we've really tried to simplify the business. As I said, focus on few areas. We want to generate cash from the business and scale up in our focus markets. We're focused on few large customers where we build our technology and innovation for them. In terms of next 12 months for the current year, we believe our top line should grow by between 10 to 12%. We also believe that our investment into our capacity will be in the range of about 350 to 400 crores. And we believe at the same time, our net debt to EBITDA, we want to bring that to about 2.5 times. So that's something that we're very focused in our current year. And I think broadly, I think these all are stepping stones towards our vision to becoming top 3. So I think that's something that we've set ourselves for. Probably in the next 3 to 4 years, we want to be in the world top 3.
All right. Thank you very much for talking to us.
Thank you.
And
Thank
wish
you
all
very
the
much.
best.
Thank you very much.